Hello, everyone. Welcome to the Fifth Person's live webinar. And if you guys can see me live, okay, we are live. Please type yes in the chat and say hello to everyone here in this live webinar. Okay, I can see a lot of you guys are saying hello to each other. Adrian, John, Angeline, all right, Chung, and of course, Steve, David, CK, Gail, Yvonne, right, Vincent, Jimmy. Wow. There are a lot of you guys here are responding to this, so I'm glad that you guys tuned into this tonight's webinar. Okay, so tonight's session is going to be very useful, and there's a lot of insights that I really want to share with you guys because I actually shared this content during the last event at the FSM1, their Expo 2024. Okay, so just a couple of weeks ago, but the room was only like 200 over people. And I thought of like bringing this same content, which I added even more contents here for tonight's session because I have more time with you guys. And I want to share some of these things that you should do, okay, if the market is going to crash in 2024, okay, because this is very, very important. You want to get yourself prepared for the next few months or for the rest of the year and what you do in 2024, okay. And I think in the news, we can pretty much see that the Dows are actually hitting at all-time high, okay? So this is what you guys actually have read. I think a couple of days ago, S&P is also hitting at all-time high. He has actually break the record that we saw in 2021. And I think this is now, the US market is really in the bull market, okay? So I know, okay, so before I proceed, I know you guys have a lot of questions, but I would try to prioritize those questions that have been submitted to us via the email because some of you guys put in the effort to write in to ask those questions, and I will prioritize those questions. And in fact, I actually prepared some of the data to answer some of those questions along the way. Okay, so for the next hour, I think you guys probably have to just sit back and relax and listen to what I have prepared for you guys for tonight's session, okay? And then later on, if I have time, I would answer some of the live questions that you guys may have, okay? Yeah, so I think there are already questions like KS, are we expecting a high probability of another black swan event? Okay, what make you suspect that the market might crash in 2024? Okay, some of you might even think that, hey, I think that the market is going to crash in 2024. Okay, so please listen to me first, okay, before you make any assumption on what tonight's session is going all about. Okay, so now. So I think for the start, I just want to perhaps, I believe most of you guys are here because of the title, right? Market going to crash in 2024. Okay, but the fact here is that I think I introduce you to this guy called, I don't tell you the name, but maybe you guys can make a guess. Who is this gentleman over here? All right, so if you know this guy, type the name in the chat, okay, and then I will share with you the actual name of this person. Okay, he's actually a very famous economist, by the way. Okay, yeah. So make a guess, anybody? Okay, I think Mark Faber. Yes, some of you are quite sharp. Okay, so this is a very famous economist. I think I have read some of his articles. And in fact, he is also known as Dr. Doom, okay, because back in 2017, right, he actually caught my attention because he wrote this title. The US market is going to end extremely bad, okay, with the stock going to plunge at least 40%. Okay, that was what he wrote in, I think, 2017. And that year wasn't the year that he actually predicted the market is going to crash. Okay, apparently when I read back, I traced back to all the news, all the interview that he has done with CNBC. I think he actually predicted many times that the market is going to crash. Okay, so 2014, you get to see that he actually predicted the market is in the bubble territory. And in 2013, he expected the S&P to drop by 20%. Okay, and yeah, so and then in 2012, the same thing, he expected the market going to crash 20%. almost every single year, he actually predicted the market is going to crash. Okay. And that was, so the last one that I saw was in 2017, where he did a live interview with CNBC, which was this. Okay. And eventually he missed his prediction again. Okay. But he got it right after, okay, in 2020, okay, that was 2017 when he predicted that the market going to crash by 40%, and he got it right in 2020, okay, 2020, and that was when the S&P crashed by almost 34%. Okay, but interestingly, even at the low point, it's still higher than his prediction at the point of time. Okay, so the market never really come to his prediction. Okay, but what I just want to share with you at the start of this session is that if you start to listen to economists or people who try to predict the market is going to crash, right? Sooner or later, the person is going to be right at one time. Okay, so the thing about investing in the stock market is that you're going to get to hear people saying that the market is going to crash again and again. Okay, every single year. Okay, and then of course after the pandemic, we saw that the market actually went for a bull run. Okay. And then that was when there was a lot of easy money, printing easy money in the US, and where that actually leads to a huge bull run in the US stock market that eventually burst. And the crash happened in the late 2022 when it was hitting at almost all-time low. Okay, and that was when the market crashed by almost 25%. Okay, and at the point in time, this is where usually, right, for our members, we will tell them that this is a bear market, is one of the best times for you to invest in US stocks. But if you read the news at the point of time, okay, you might be scared because there were a lot of doom and gloom about the market at the point of time. If you guys still remember, I think if I were to pull out some of the news that I've shared with our members, or even during the live webinar at the point of times, right, there were news by Bloomberg, CNBC saying that the market is going to crash, and the US recession forecast is going to hit 100%, right? And that was in 17 October 2022, okay? And that was when, if you invested in the US market, a lot of people who have lost money, especially if you invest in some of the growth stock. At the point of time, it crashed almost 80-90%. So a lot of people that entered the market during the 2020, they were all frustrated, and they actually gave up in 2022 because it was the year where a lot of people lost so much money. And the news out there was so bad, okay? And even IMF actually forecasted that, the next year, for the next year, which is 2023, the worst is yet to come, okay? So, at the time, it doesn't make sense for you to invest at all because the economy, the US is going to have a hard landing because they raised the rate too fast. And then there were a lot of economists predicting the market is going to crash. But guess what? That was the lowest point, okay, in 2022. And since then, the market has a very strong rebound. Okay, so you see, news was in 2022. Okay, that was when the time doom and gloom, all the news that read out there. It's very confusing, I know. Okay, but that actually leads to the huge bull run that we saw today, where starting at this webinar, I show you that Dow is hitting at all-time high together with S&P. Okay, now the market is up 30%. Okay, and in fact, I did the same, the last webinar that I did was actually last month in December. I'm not sure you guys attended. If you attended, just type me in the chat. At least I know some of you here actually attended my last month webinar, where I did it live also, something like similar to this. Okay, and there were a lot of you guys asking about the same question. Okay, so would there be a recession or mild recession this year? Okay, what do you think of the recession? Is it happening next year, referring to this year, 2024? So that's why I thought of making a separate session, webinar session for this, because there were so many questions about people asking, US heading for recession, how bad will it affect Singapore market? Yeah, some of you actually attended that. Mary, Ken, Manseng, thank you so much. Adrian, Yvonne, all right. So glad you guys are coming back for this session, because this is part 2, okay? And some say there will be a recession in 2024, and others say not. Okay, in that either case, how should you deploy the cash? Okay, so in all these questions, I'll try to answer in today's session. Okay, hopefully you get away with some insights that can be useful for you. And would there be recession in any key market or industry, particular sector? Okay, so now there were a lot of questions. Okay, so how do I know whether the market is going to crash? Okay, so how do you know whether the market is going to crash? Okay, so in the year of 2024, I think soon you should be able to ask ChatGPT whether the market will crash, because now AI is everything. Okay, that actually is driving the stock bull run, the market bull run in the US, because there's a lot of AI, artificial intelligence, that is going to drive the growth for the tech sector. Okay, but of course now if you ask ChatGPT, maybe the ChatGPT version 4.5 can answer that question. Okay, but for now, if you enter the question whether the market will crash in 2024, the answer is they don't know, right? They will just say that, oh, the ChatGPT doesn't make any prediction. Okay, but what, as a fundamental investor, that we will be doing is usually we look at some of the key indicators, right? So some value investors look at this indicator by Warren Buffett. Okay, so we call it the Warren Buffett indicator, where it kind of measure the market value of the US against the GDP. Okay, so if the ratio is more than 100%, okay, basically, that is a sign that is overvalued, the market is overheated. So at this stage, if you go and look at the Buffett indicator, the percentage of market value against GDP is about 180%. Okay, so this stands between one standard deviation and two standard deviation, positive to 1 and 2 standard deviation, which is also a sign that market is expensive in the US. Okay, so this is one way that people assess whether it is a good time to enter the market from the macro perspective. Okay, so this indicator is telling us that, hey, market is now overvalued, is hitting up. Okay, so you got to be more cautious. Okay, there are other indicators like the CAPE ratio. Okay, this is an inflation-adjusted ratio, or basically based on the average earnings over the last 10 years. Because if you measure PE ratio for, like, in 2020, when there are a lot of companies in the US have a depressed earning, the PE ratio will look like distorted, right? So this is where CAPE ratio comes in, because it's adjusted for that cyclical elements in it. And yeah, so this is the adjusted figure. So you can actually see that at this stage, the US is also hitting at about 1.5 standard deviation. The PE ratio stands at about 32 times PE, which is near historical high. But it wasn't at the level that we saw during the tech bubble region, okay, which is in 1999, 2000, right? This was super heated. But now it's expensive, okay? This is what the CAPE ratio is telling you. Right, and of course, some people look at inverted yield curve. Okay, so this yield curve has been at play, has worked pretty well. Okay, so you saw that in 2000, right, before the big crash, the inverted yield curve was negative for a couple of years. Okay, before there was a big correction, and then it happens again in 2006, 2007, 2008, where the inverted yield curve was also at the negative region. Okay, and then the inverted yield curve, I think, hit almost in 2019, right? So that was where a lot of recession talk came back again during the trade war in 2018, if you guys still remember that. And then suddenly COVID-19 came, of course, inverted yield curve suddenly bounced back again. So that kind of like tells you that, hey, the market is going to crash, right? But you don't know when, right? It's just a matter of time. And then now, for almost 2 years, now we are at a negative inverted yield curve, okay? Will it repeat the same crisis in the next 2024? Will the crisis happen in 2024, 2025? I don't know, actually. Okay, but these are some indicators that what is telling us that the market in the US especially is on the high side. Okay, so if you are planning to deploy capital, you need to be very, very cautious, and I will help you to prepare some of the things that you need to do right now. Okay, if you are planning to invest in the long term and you're planning to grow your money. Okay, so there are other indicators like fear and greed index. Okay, so this, I think you can go to CNN website. You can actually get this gauge, and this is the latest one that I got based on January today's one. Okay, so you get to see that the index, the gauge, is actually pointing at the greed region. Okay, which means that you need to be extra cautious. Okay, because the market is very bullish. All the news that you read out there in the US is pointing to that, the times is good to invest. Okay, market is hitting an all-time high. People are making money. A lot of monies are flowing in. Right, ETFs are hitting record high. This is the time where you need to be cautious. Okay, so of course there are sometimes if you follow financial news that I do, right? You can read the news. Okay, sometimes it kind of give you a sense whether the market is slightly overheated, right? So I read a lot of news, Reuters, Bloomberg, CNBC, CNN, Financial Times, Business Times, you name it. Okay, I read almost all the news out there. Okay, but of course, if you are someone who started investing and you were just blindly reading news and you trust all this information, all the things that's been written in the media, okay, if you read too much of it, okay, you might end up as a scapegoat. Okay, you might end up following what they say, and then they say that the market is going to crash. Okay, there's a prediction that the economy is going to crash, which is what happened in 2022. You cash out everything, then that's where you miss your bull run. Okay, this year US is hitting record high. Okay, so that's why it's very confusing if you just read the news. So if you don't know what you are reading on the news, right, it's better not to read the news, because the news will sway your emotion, will cause you to make a mistake. Okay, because news, especially bad news, sell. Okay, so what I really want to share with you is that I think over the years of seeing through some of the big financial crises, like those crash of over 30-40%, I think a lot of these events happens mainly due to the black swan events. Okay, black swan events are those events that are unpredictable. Okay, for instance, all right, so 1999 dot-com crash. Okay, so even though a lot of stocks are trading at a sky high valuation, you don't know when the crash is going to come. Okay, so this is actually almost a man-made event. So if you look at just simple valuation chart, like the PE, the K ratio, the or Buffett ratio is hitting all time. Obviously, you can prepare for that. You can cash out. You can reduce your holding in the US market, and then you can build up your cash. So when the next crash came in 2000 and 2001, right, that's the time when you start to deploy back again. Okay, that's one you can predict. Okay, but the black swan events are a lot harder to predict. Okay, like those that you saw with the global financial crisis when the Lehman Brothers collapse. Okay, a lot of debt went sour. Okay, all this sophisticated instrument for people to invest actually blow up. So, okay, so that kind of hit the whole financial system. So those are the events where it's very hard to see, especially events like pandemic 2020, right? So 2020 was the year where the US market crashed 30%, and it crashed not because Mark Faber was right with his prediction, but he predicted in 2017, right? And he only came in 2020, and the crash for a different reason, because the economy was shut down and there was a pandemic going around. And it's been like almost many years that since SARS, we saw that this COVID-19 went through a massive scale around the world, right? So these are the black swan events that are very, very hard to predict. Okay, so I think it's very difficult to predict whether the market is going to crash this year or next year. Okay, but what we do know is that now US market is very expensive. You really want to pull back on your deployment. If you have money now, of course, people say, "Oh, it's time to invest in the US." It's time for you to be more cautious. Okay, so and when the news are saying that is the market is going to crash, people are dying, people are losing their job, and that's the time where you should be investing in the US market. But it's difficult to implement. Okay, and what I usually do, okay, or what we usually look at, okay, some of the indicator like your VIX index. So this is your volatility index. Usually this one is quite accurate. Okay, so I use it a lot for me. When I want to deploy my cash. Okay, so you see that in 1999. Okay, when every time you hit above 40 times, okay, or 50 for the VIX index, that's really one of the best time for you to invest. Okay, 2009. Okay, so you see it hitting as high as 80. The same thing that you saw with 2020. And 2020 was the year where we were very aggressive with our deployment of capital. We deployed almost 1 million at a time. Okay, so that was very, very aggressive. And then 2011, you know, that crisis. 2015, there was, I think, the stock market burst in China. Okay, so and that also leads to the higher VIX index. And then, of course, you saw with 2018, where I think the trade war. Okay, and then 2019, there was a US inverted yield curve where people are predicting the market is going to crash. Okay, so I think conservatively, if you have you are short of capital, every time when you see the VIX index hitting 40 times, 50 times, that's the time where you should be deploying most of your cash. Okay, at today's recording, as I checked just now, the VIX index is about, I think, 13 times. Okay, so it's nothing to. It's not, the volatility is very low. Okay, so it's one of those times where you should be selling rather than buying. Okay, so if you have some position in the US, then the stocks are extremely overvalued, you are short of cash, you want to beef up, you can actually slowly par down those position because the market is heated over there. Okay, so now let's look at the S&P 500. Okay, so this is the latest one, is hitting an all-time high, and of course there was in 2022. That was where it entered the bear market. Okay, so how I define a bear market, basically anything more than the 20% correction usually is considered a bear market. Okay, so for S&P 500, I don't use the CAPE ratio. Okay, I use the normal PE. Okay, but it looks more distorted, especially if you look at the 2020 period. Okay, that's why I think CAPE ratio came in to adjust for this. Okay, but you can ignore it because we have long past that timing. Okay, so now this is S&P 500. Okay, not adjusted, not based on 10 years average earning. Okay, based on their yearly earnings, so it's a lot lumpier in nature. Okay, but you get to see now the average, the 10-year average is about close to 24. Okay, and basically the red one is the one that you know that is expensive, you want to stay out. Okay, and then the green one is the one that you know that is cheap. Okay, you want to buy, and that occurs in 2022, right? So that was the time where a lot of techs, after they got sold down in the post COVID rally, okay, a lot of tech stock will become very cheap at that point in time. Okay, and at the time, of course, if you are our members like Alpha Lab or DM Pro, we have actually highlighted to you. Those are one of the time, especially for Alpha Lab members, those are one of the time to actually enter the US market, right? But since then, we've been very quiet with US market. Even until today, we are net seller rather than a net buyer for US market. Okay, so with valuation now is reaching on the expensive territory. Okay, it's better not for you to deploy cash in that market. Actually, that's our take right now. Okay, so the next time when we start to deploy is when you see this S&P PE started to near the green zone. Okay, okay, so there's this question, since it's relevant to what I'm talking now. When should we consider selling our position based on VIX index? Okay, so VIX, I don't usually use it for selling, more for entry. But for selling, I think I look at PE chart. You guys can use the CAPE ratio. Yeah, so if you look at the CAPE ratio, you can actually Google it easily, actually, right? So you can get it over the internet. But it's pretty similar to what I'm showing you right now. Right now is actually on the expensive region. So this is one of the time where you can slowly par down. I don't encourage you to par down 100% of your position in the US, right? Let's say if you own stock in one company that you think is overvalued, for example, NVIDIA, right? So a lot of people make money on NVIDIA, right? So if let's say I have a position on NVIDIA, okay, I may par down, my initial capital, right? So maybe I have triple up my capital. I just par down my initial capital. I kept that 200% gain there. Or you can just par down 50% and then you keep the rest if you think that there's still room for AIs to run, right? But because it's a very super expensive stock, the expectation is way too high. It's very difficult for company to keep on beating that kind of earnings, double up, triple up, in a year or two, right? So it's difficult to maintain that momentum. So eventually, once they can't hit that, the PE will derate downwards again for NVIDIA, and then the share price may start to collapse. Okay, so that's one strategy you can do it. Okay, but you don't want to be fully on cash, right? You don't really want to fully market, which means say market is expensive, there better cash out everything, wait for crash and then you buy. No, don't do that. Don't do that. Okay, so and then there's a question by Jin Ho. He or she wrote in. Okay, 2024 looks like another tricky year with US elections coming up. Yeah. Okay, other than the index being at all-time high, okay, any major factor 50% consider that prompt you want to anticipate in the crash situation. Okay, so I'm not expecting any big crash. Even if it comes, it's going to be caused by some of the black swan events. But this year should look, the trend looks pretty good. Okay, the economy is doing well. Major stock indices are going up, so you just have to be more cautious, right? And so I don't have a big position in the US. Yeah, I miss the bull. Okay, the bull market. I attempted to sell off my holdings at current bullish valuation and re-enter the market corrects. Yes, we are told we should not time the market, but isn't now the time to sell the US market? Okay, so like I said, I think you don't want to time the market by cashing out everything. Okay, it's important to stay invested, especially if you invested in good quality companies. Okay, these are the companies that can compound over time. Their next low could be still higher than the price that you bought. Okay, so you don't want to do that, right? So I think you can pile down some of the position, but I think it's much more important to stay invested in quality companies. Okay, and then Mary asked the question: can you show the valuation chart for Magnificent Seven? Okay, so yeah, so there's a lot of talk on Magnificent Seven. Okay, there's a question on how do you get the VIX index. You can actually Google it. There's one that you can get from Yahoo website. Okay, VIX index. Okay, so it's very easy to get the data. Okay, and can you show the valuation chart on Magnificent Seven? Okay, so I did this for Mary. For those of you who want to know, just the seven. Basically your Microsoft, Alphabet, Amazon, Tesla, and then your Meta. And what else? Okay, did I miss out anything? Okay, so but basically the Magnificent Seven, and yeah, so these are the PE of the consolidated earnings and then the market valuation of it. Okay, so this is the adjusted for their specifically for these seven stocks, and yeah, so this is where you see that they're currently based on 10-year average. Now they're actually on the high side. The Magnificent Seven now is trading at a very expensive valuation. And I think you get to see that it's expensive at this stage. Okay, so so it's not a time for you to deploy. But in 2022, we were telling our alpha members it's time to invest. Okay, but now no. Okay, so I think you might just want to wait. And this is one of the best time for you to pile down if you have stake in those company. You can slowly pile down some of those positions, but you want to stay invested because these are some of the good quality companies out there. I mean, I don't personally invest in Tesla. I don't think Tesla is one of those good stocks to invest for a long term. Okay, so Magnificent Six. Okay, so for my list, yeah. So I think a lot of you would think will sell. Okay, so and then there's next question. Okay, by Sarah Vanan. Is S&P 500 ETF, okay, like your SPY or VOO, truly a good long-term equity investment? You ask this question to Warren Buffett and Charlie Munger, they will both say yes. Okay, Charlie Munger won't say yes anymore because he has passed on. But yeah, so S&P 500, I think because of the top 500 company in the US, if you go inside and analyze every one of those companies, most of them are good, solid quality companies. Okay, that's why Buffett keep on saying the S&P 500 will do well. Okay, but the timing is also very important. Okay, you can just simply buy. But a lot of time people say S&P is good to invest. Okay, but if you bought at a high, like right now, right, your return is going to get subpar return. You're going to get subpar return. You want to time your entry. Okay, even for index, I think it's very important to study the valuation of the index before you enter. Right, so S&P 500 is those that you can, just now the K ratio is a kind of like give you a gauge of the S&P 500 as per se. Okay, so right now it's a good long-term investment, but your entry price, you need to make sure you get the right price. Okay, you don't want to buy at the high and then the next moment it crash. You might only break even in the next 2 to 3 years. Okay, so I don't believe in like monthly dollar cost averaging, keep on buying the index, right? So you can do that if you don't have time to study all of this, but it doesn't take a lot of effort, okay, to do this. Okay, so just make sure your entry price is right, and then you save up, and then the next time when the market crash, you deploy. That's your return will be much better over the long term versus if you keep on buying every month. Okay, so if you buy every month, you're not going to get that 8%, 7% annualized return, by the way. Okay, so I mean, those are calculations usually made at one point. Okay, but because you buy every month, you might buy some at the high, some at the middle, some at the low, so your average return might end up at like 4-5% a year. Okay, over the long term, right? So yeah, and so of course, I think right now you should be aware that it's difficult to time the market. We know that the US market is expensive, right? But we still don't know where the market is going to crash. Okay, so what I want to prepare you guys next is that what should you do before the market crash? Okay, and yeah, so what should you do before the market crash? Okay, you need to first mentally prepare that you might lose your active income. Okay, because the next time when the market crash, the next moment you know that, oh, your company is retrenching workers. It might be one of those get hit, because this happens again and again. Every time there's a black swan event, there's a crisis, the bankruptcy among businesses goes up. Okay, and then a lot of people who lose their job also go up. Right, so this is the stats that you saw in 2020. Right, so millions of people actually are out of job. Right, so you need to make sure that yourself are prepared. Okay, so usually you want to have your emergency cash that you set aside, at least 6 months of your money expenses. For those of you who want to be more conservative, you want to make sure that you set aside at least a year. All right, and if you are sole breadwinner for your family, you want to make sure that the expenses of the whole household, not just yourself. Okay, so that's one thing that you need to take precaution, because you don't want to get caught in a situation where you lose your active income, you will be forced to sell all of your shares. Okay, and that is a bad time to sell. You don't want to end up in that scenario where it is so bad. Okay, it's so depressing. Okay, so make sure that you are mentally prepared, you are financially prepared for the crash. Okay, you might not lose your job, of course. Okay, so I'm just taking precaution here. Okay, and second, you want to have cash ready. Okay, you want to have your bullets, your cash ready that you can deploy. Right, so there's a lot of question, right, on how much should you save up in your portfolio as a percentage for the cash, as a percentage of your portfolio, right? So there's no hard rule and fast rule. I think most people will say, oh, 20% is a good one. If your portfolio is 1 million, you should at all time have $200,000 in cash. All right, but if you look at Warren Buffett, okay, so this is the Berkshire Hathaway. You actually get to see how he deploy the cash. Right? This is a reflection on how he allocate capital, right? So in the time when the market is in the bull, he kept 30% cash, okay? And when the market crashed in 0809, you see the amount of cash as a percentage of his equity portfolio dropped to as low as 16%. Okay, so I think in 2001, you saw that the deployment even dropped even lower to 6%, 7%. Okay, so there was a big crash, remember, in tech bubble crash. So Warren Buffett, and then after that there was a bull run, and then he started to pile cash again. And then you see that every time the market crashed, he would deploy the cash. And then of course there's a bull run again, so he slowly beef up his cash to 25%, and then as high as 36%. And of course, 2018, there was a trade war. 2019, there was also stock was also slightly cheap, okay, but not that cheap. Until 2020, actually, he missed that period because the crash for 2020 was so fast. It's almost like 6 months and it's over, right? So he actually missed that period, remember, right? But he actually made a good bet on Apple, and that actually helps. But Berkshire Hathaway a lot, okay. But here, I just want to point out to you that you see Warren Buffett is keeping about 30-40% cash at all time. Okay, so this is the range that you can follow, Warren Buffett, because if you want to learn, if you want to be the best, just learn from the best. And Buffett, this is how Buffett actually structured his portfolio and how much cash he kept at all time. Okay, and I know some of you are not comfortable sitting on cash. Okay, Rusmin, inflation is all time high. You shouldn't sit on cash. Okay. Yeah, you shouldn't sit on cash, okay? Especially inflation is all-time high. But you shouldn't deploy the cash if you can't find any good ideas. You don't want to do anything stupid about it, okay? Just simply because of inflation, okay? Don't get rushed because of the inflation. You need to deploy, no, keep the cash somewhere else. And if you look at Warren Buffett, he's actually pumped in a lot of his money on short-term investment. These are mostly like U.S. Treasury bill, right, which actually earn pretty good interest rate. and he built up a lot, actually, especially in 2022 and 2023. All right, you see, in 2023, he even built up even more. Okay, so what he did, he actually parked his money in US Treasury rate. It was actually giving about 4%, 5% last year, remember? Now it's come down. In Singapore, of course, you can park on Singapore savings bonds. Okay, the limit is about $200,000. And I think last year the average is about above 3% for SSB. Okay, I have been scooping out a lot of SSB also last year. And of course, earlier this year, starting of this year, the SSB rate started to decline to about 2.8%. So, yeah, it's still not too bad. If you missed out the SSB Singapore savings bonds, you didn't buy for the last 2 years, for whatever reason, you've been sleeping, you're not following the financial market, go and get it now. It's never too late, right? I mean, at least you get promised to get paid for 10 years, right? And then you can withdraw it anytime. There's only 1 month window period to get your money back, and there's no penalty. You still get your accrued interest. Okay, if you hold for 3 months and they pay out every 6 months, right? You still get entitled for the 3 months of interest, right? If you withdraw it 3 months down the road. Okay, so that's the beauty of Singapore savings bonds. So I recommend this to everybody. Okay, anyone on the street who have the money to save up and then want to deploy in the market crash. Okay, so, and you know, when the market crash, usually it will be more than 1 month. Okay, so you still can get have enough time to withdraw those cash out to deploy when the crash really comes, right? So of course, if you max out your SSB, go and deploy on the T-bills. You know, and of course, if you have US dollars, you can of course go and buy US Treasury bill as well. I will recommend those short-term one like 6 months or a year. 6 months preferably, okay? But at least you still get a good yield. I mean, those are the US currency that you intend to deploy in the US market, okay? Don't purposely go and convert into US dollars just to get a higher and then you convert it back to Sing dollars or whichever currency that you are based in, okay? So don't do that, okay? But I think most of you should have invest in US, I assume. So I think it's fine to keep some USD in your brokerage account, right? Or you can actually sweep into that money market fund that some of the brokerage nowadays they offer pretty good yield itself. Okay, so I know you guys can Malaysian buy SSB. I think if you have a CDP account in Singapore, you could buy SSB. Okay, yeah, so you can do the auto sweep for your fund supermart. Okay. How to buy UST bills? I think you can buy from your brokerage. I mean, I'm using Interactive Broker, so I can do it. You can do it through Interactive Brokers, or you can just simply Google it, how to buy UST bill, right? You can't buy it directly because those bills are only entitled. You can buy those, I think, ETF with UST bills itself, okay? So, is Berkshire okay? Okay, so I think I'm just going to move on and then I will try to answer some of the questions that you guys may have. Okay, now I'm just selectively picking out some of the questions that are relevant that I'm talking about. Okay, so in summary, what to do before the market crash? Okay, I just want to misspelling here, so ignore this. Sorry about it. So basically, you need to invest the money that you don't need it in the 5 to 10 years. Okay, so if you're planning to invest or if you already invested, make sure those money you don't need it in the next 5 to 10 years. Okay, very, very important because you don't want to get caught in the situation where you need to sell your investment because you need the money for your kids' education or for emergency fund. Don't invest your emergency fund. Okay, and of course, this is a rule number 1. Okay, very, very important. And of course, you want to pay down some of the high interest debt that you have. If you have credit card debt, please clear it off. Of course, and don't leverage to invest, because if you leverage to invest, the next gap down 20%, you'll be wiped out. Okay, so don't ever leverage. Okay, it's okay to leverage to buy property if you are planning to stay for yourself, right? But property generally are a lot more stable as compared to stocks. Stocks are very volatile, so it's very easy to get margin call. Okay, and of course, make sure you have an emergency fund at all times. Okay, so before the market crash, these are the things that you need to prepare. Okay, and of course, make sure you are sufficiently insured. Yeah, so insurance is very important. So your basic hospitalization, make sure it's already there. Critical illness, accident plan. You will, get into accident quite often. I do personally have, because I'm very active, in sports. So sometimes I get injury. So that is good to have that as well. Okay, and yeah, and then I think the most important part that I want to share with you, where a lot of people don't do, is actually you have to start to build your watch list. Okay, if you don't build your watch list now, okay, when the crash comes, you don't have the time to deploy, or you don't have time to analyze the stocks out there. Okay, because when the crash happens, you will get so busy looking at the market, you don't have the time to analyze stocks. Okay, because that's from my personal experience. When the market really crashed, like what you saw in 2020, I don't have the time to analyze stock. I literally looking at stocks that I want to buy in my watch list, because I already know a list of stocks that are very good, top solid one that I want to own. But because the valuations are expensive, so I've been holding on to them. I, keep them. But the crash comes. That's the time where you want to shoot deploy your capital, right? So building watch list is very, very important, and it takes a long, long time. Okay, of course, if you are our Alpha Lab members or the Building Mission Professional members, you can, you already have that watch list for yourself. Okay, for those of you who don't have access to that, okay, you need to build your watch list. Okay, so this is what you should do before the market crashes. Okay, there are many more things. Of course, this is just in the nutshell what you should be doing. Okay. And of course, the next question is, now this is for the US market, right? What to do when the market crash, during the crash, okay? So this is a different scenario altogether. Before the market crash, everybody happy, everybody making money, and yeah, so there's nothing to prepare, okay? But actually you start to prepare, you have to prepare for the next crash. And once you are prepared, and when the crash comes, okay, what do you do, right? So how do you know whether it's a crash? Okay, well, every time when the market correct by 20%, that is what I call as meaning correction. If it correct more than 30%, 35%, for example, I think it's a big crash, like 40% crash or 50% crash is a major crisis, okay? So when that happens, the next thing you know that when you read the news, it's doom and gloom, okay? So be careful, okay? So when you read the news, every year, okay, there's always a thesis on certain news. There's always a story why the market crash or why will it crash more, okay? So, I mean, the past 10, 20 years, you saw all these headlines in the news. It's everywhere, okay? And it's not going to end, okay? In the next 10 years, okay, you're going to see different type of things playing out, right? And all these are doom and gloom type of news. When you read it, you're very scared. Okay, you don't dare to deploy your cash. Okay, so you got to be careful. Okay, so now let me give you an example. What should you do during the crash, or what is happening when there is a crash? Okay, Hong Kong market. Okay, now you speak to anyone about Hong Kong market, people say, "Xiao, crazy. I give up on Hong Kong already. All my stock lose money, right? Yeah. Invested there 3 years, all down, all red, right? And everyone is like pulling out the funds from the market. Yeah, those are the news that you are reading right now. Okay, that's why I think this week, earlier the week, Chinese market hitting all-time low again, especially Hong Kong, because a lot of foreign funds are pulling out because Chinese government is not doing enough stimulus, blah blah blah. A lot of stories, okay, a lot of reasoning, okay. So all these are macro news. Is always there, okay? That's why it leads to the sell down or it leads to the bull market, okay? And so now, and then I actually receive a lot of questions. We receive a lot of questions for this session, where I think Angus actually asked, how do you view the Hong Kong and China market? What are the indicators for one to start entry into those markets? And China tech, China stock, do you think is the bottom? What percentage of your portfolio is Chinese in China tech? And what do you recommend? Okay, what would you like to know Hong Kong, your take on Hong Kong Chinese market outlook in 2024, okay? And of course, there are so many questions about Chinese market, okay? For those who are not more comfortable now to invest in China, is it better to buy specific stocks or ETF, okay? So those are all very, very good questions, okay? So I think generally they are geared towards the same thing, right? Is China market cheap, okay? With Hang Seng Index, I think this is a market where it's very easy to access. I think any brokerage that you have should have a Hong Kong market. And you can see that the late 2022 was the most pessimistic year, where I think there was a handover of CCP, the power. Okay, basically Xi Jinping got elected again, and then people deemed that China is no longer investable, right? So that was the lowest, right? And then there was a sharp rebound in early of 2023, but that quickly dies off because the rebound wasn't as fast or as quick as what people expect, and then actually start to lead to a huge sell down until the one that we saw this week. Okay, so the index itself already crashed 52%. This is what I call major crisis, right? So this is what Hang Seng is going through right now. It's completely opposite of US market, where if you invest in US, you'll be very happy, okay? And you like, oh, US is a way to go. Don't invest in China. That's what people will tell you, okay? Because they make money in the US, they lose money in the Chinese market. They'll curse and swear, okay? And then they will just give up everything. A lot of people will just run away. Institutional funds are pulling out, okay, because a lot of reason, okay, China is no longer friendly or whichever, okay, even though it's not as bad as what people expect, okay. But what I really want to share with you is that this is one of the longest bear market that we have witnessed over the last 10 years, okay. So if you look at the Hang Seng Index, actually the correction started in early 2021, and that has been downtrend since 2021 to until today. Okay, so it has been almost 3 years, all right? So people who invested in Chinese market or Hong Kong market, they feel depressed because 3 years, almost 3 years, their Chinese stock are still not performing at all, okay? Not performing at all. They put in more money, I put in more money, I lose more money, I put in more money, it drop again. Until a lot of our members say, wow, deploy Chinese stocks are handshaking one. You know, so scary. You know, that's a kind of situation that people who go through a bear market will go through. Okay, this is what you experience during the bear market. This is exactly those of you who invest in Chinese stock. Okay, those of you who invest in Chinese Hong Kong stock, just type me. All right, in the chat. At least I know how many of you here invested in the Chinese market. Are you scared? All right, type yes if you are scared. Yeah. So I just want to get a sense on how many of you actually invest in Chinese market and how many of you are so scared right now because the market seems to be like going lower and lower. Okay. Wow. So many of you invested in Chinese market. Wow. Wow. It's a floodgate that just opened up. Okay. Oh gosh. The channel, right? Yeah. So a lot of you are so scared, right? So this is how the bear market feels like. Okay. So I think we are in a very situation where very interesting US market, bull market, Chinese market, bear market, you feel different emotion. If you are in US stock, you feel happy. If you are in Chinese stock, you feel sad. Okay. Want to invest but don't know when to enter. Okay. Buy Xiaomi. Okay. All right. Hey, Alvin, don't spam, Alvin. There's too many already. Okay. And my house is indeed shaking, and when I press the buy button, Daniel. Well, but kudos to you. Okay, if you guys are still there to pull the bullets, I think this is one of the best times to really, enter the Chinese market, even though there are so many doom and gloom out there. Okay, but it's almost 3 years we are still down. Right, it's one of the longest bear market. And if you look at the Hang Seng fundamentals, the whole index, okay, now the Hang Seng is no longer top 30s, by the way. Now it's about top 80s. They are now diversifying out more. But if you look at the PE ratio, it's actually on the green zone, which is basically undervalued, right? But it wasn't as bad as compared to what we saw in 2022, okay? But 2022, you must understand that a lot of tech company, Chinese company in the US have a record year in 2021, so that record earnings actually caused the PE multiple to drop at all-time low, okay? And that was the year where we were very aggressive with Chinese stock also. We started to enter, I think, somewhere around here, right? And then, of course, things got worse, and then we added more, and then it got worse again, we added more. And then, of course, earlier the year, we actually, had a very good run. And then the whole of last year, second half was like very depressing. It came back down again back to where we almost started, right? In this level, okay? So it's almost close to the late 2022 low, okay? So those of you who missed out that year where people started saying that China is no longer investable, right? This is the time, this is your chance to re-enter the market, okay? Because I don't know whether that opportunity will present itself again for how long, okay? So it's one of those markets where I think if you dare to pull the triggers, it's one of those time. Is today, it's one of those time to really either if you have more cash to deploy more, you should, okay? But if you have reached your limit, obviously you might want to wash back and relax, okay? In fact, some of those companies that we bought during the 2022 the current price have not reached below lower than that, okay? So that's why I'm not adding as per se, because they are still above on the the higher than the last time when we added in 2022. Okay, if you are in the same situation, you don't have to add. Okay, but if you have more capital, you think it's no-brainer, right? Which I think is also no-brainer, right? It's the time to really go in. Okay, even though it may look like an idiot to go to enter the Chinese market where everyone tell you not to enter the Chinese market, because there are so many bad news out there. Okay, so and now the authority is actually activating their national power. Okay, basically they are activating their reserve and mobilizing the capital to support the financial market. This is not the first time that they have done. They have done it in 2015 crash. They've done it in 2019, 2018 the trade war. Even I think 2021 they also did it. So they have frequently intervene. Okay, I mean China is not the only market that intervene the stock market. US also, Japan also. I mean the authority usually tend to intervene the market whenever there's a panic in the market. So I mean you can say that they are biggest market maker, Zheng okay. So a market manipulator. It is lah, okay. But they are a state, right? So they are the country, the government that actually control that stock market. So this will probably help, but I don't know how long this will last, on how much the capital that we need to save that stock market. But this is one of those things that you see with a lot of Chinese company doing share buyback. The amount of buyback they buy are incredible, right? It's a lot. It's similar to what you saw in the US in 0809. The buyback is at all-time high. So whenever you see corporate buyback at all-time high, it's a sign that valuations are cheap. It's a sign that you should actually be buying. When you see here people are fleeing the market, foreign investors are pulling out, that's one of the best time to invest. Okay, it looks a bit foolish to go against the crowd. Okay, but it is usually in a short to mid-term, you should play out well. Okay, so obviously in the short to mid-term, I'm very bullish on China market, largely because the valuation is hitting an all-time high. It's also one of those best market to invest for dividend stock, because a lot of companies that we have dividend stock especially, and those of you who have dividend machine professional membership, you know that the yield now, I think you can get easily 8, 9%, 10%, sustainably. Okay, those are the companies that can sustain their dividends, right? And they are trading at 9, 8, 10%, 11% yield. Okay, so you can't get this in other market except China, okay, right now, right? But in the long term, I worry for China, okay, largely because the China demographic, okay? So this China demographic is an issue where they need to iron out, okay, because currently China median age is about 38 years, and now they have they are under population in the way that the birth rate is declining. The citizens are not giving, I mean, nowadays people don't want to have kids, okay? That's the trend moving forward, okay? And the problem with China is that they have such a large population, they can't import talents like what Singapore did. Okay, Singapore, you have a low birth rate, doesn't matter, right? You have foreign talents coming in. I'm one of those. And then that actually helps to boost the working labor market in the Singapore, right? That kind of solves the problem. But in China, if they don't get rich or wealthy enough by 2040, 2050, the population will start to decline, and it has been on decline actually. All right, I mean, you will have a problem, demographic problem, where your working population started to age, and then when they start to come down, the whole country economy GDP will start to drop, right? So they need to find this replacement, and at this stage, there's no long-term solution to that. I mean, they are encouraging people to have more kids. They have demolished the one-child policy a long time ago, okay, and it still doesn't work, okay? So they need to solve this issue. I'm not sure how they're going to resolve it, because they just can't simply import, talents in, right? Because of the massive scale, right? India, on the other hand, has a good economy, right? They have good demographic, right? They have a lot of young median age, 28 years old, and then the birth rate is also still on the high side. So they are able to replace those working, those super productive labor once these people start to age. Okay, so long-term wise, I think China, you need to watch this demographic trend. Okay, it moves very slowly, right? But then don't take it for granted, right? It may happens in the next 30, 40, 50 years. It's a 30, 40 years issue, right? So they need to iron this out, okay? But in the short term, mid term, like next 5 years, 10 years, I'm not worried about this, okay? Because the working age population is still there to go through, right? To help to support the GDP growth, expansion, and all that, right? So yeah, and Yeah, so even though India has the best demographic, that doesn't mean that you should invest in India. Okay, I'll cover more on India later because there's also a question on Indian market. Okay, but to sum up Chinese market, right? So, or rather US market also, this is what Warren Buffett always said, right? Be fearful when others are greedy, be greedy when others are fearful. So now if you're in Chinese market, you try to apply this, what Buffett is sharing with you. And then you realize that, hey, actually it's not difficult. It's not easy, because the whole Chinese stock is so bad. Now a lot of you just now say if you deploy your money, your hand is shaking. Yes, those are what is bear market looks like. Okay. And I can tell you that a lot of people are actually now very spoiled by the stock market. Especially if you are new in investing, if you enter the market in the last 5 years or 3 years, okay, you are spoiled. Okay, I tell you why. Now, if you look at the last 5 years or even 10 years, okay, the correction in the market is actually very short, right? So you saw the trade war. The S&P dropped by I think 20%, right? And it recovers immediately in a year. Okay, so you don't really experience a bear market. You know it's a crash. Okay, time to buy. And then after you buy, wow, it works. And then the market rebounded. And then you feel like, wow, it's so easy investing. And then 2020 came, all right? There was the time where you were locked down at home, nothing to do. Market crash, people say buy stock. And then you went, you buy, whack, wow, you make money again. Wow, like so easy to make money, you know, a crash. And then just after that, you buy crash, and then the next moment, you don't need to wait long, it went up, right? And then what happened in 2022? There was a crash again, right? And this whole cycle takes 2 years, right? So technically, if you buy during this, you only actually 1.5 years, right? So it's very, very short, right? So a lot of new investors, especially you just entered the market in the last 5 years, you were a bit spoiled in the sense that, you know, if you only invest in the US market, you will have this mentality that, oh, every time when there's a crash, 20%, 35%, 25%, right? Next moment, the recovery will be very fast. Okay, this has been true in the US market, right? But if you invest long enough, okay, now if you go back to 1968, okay, the year before I was born, okay, I wasn't born then. 1973, I wasn't born. I think a lot of you here also were not born then. But if you go back to S&P 500, right, not all crashes are so short. Okay, so if you look at the 1968 crash, that took 3 years for the market to recover. Okay, so it was down 1.5 years. Not too bad. Okay, so it's 3 years. But if you look at 1973 crash, okay, it took 7 years. Right, so 2 years of downtrend, all right, that is actually quite depressing. Okay, China is going through the 3rd year of downtrend. Okay, just imagine that, right? So those people who gone through 2 years of downtrend can be quite depressing. If you go through 3 years of downtrend, even more depressing, right? So this took 7 years for it to recover. Okay, and then if you go to 1987 crash, okay, that took 2 years. Okay, I mean it wasn't long, okay, but it's good enough for you to know that, okay, it's quite a quick recovery. But 1997 Asian financial crisis, I think some of you have probably experienced this, but the whole Straits Times Index took 4 years to recover, right? 3 years of ongoing downtrend, right? And then after that, in the next the 4th year onwards, started to go for a bull market, right? So that cycle took 4 years. Okay, today, if you ask those people who just invested in the 5 years ago, they may not have the patience, right? Because we have experienced that the recovery is like a year or 2 years or even 6 months, like what we saw with 2020, right? But don't expect every financial crisis to recover so quickly. Depend on the severity of it, right? So, but this is just to give you a sense that, you know, different financial crises would take the duration of it. It can be longer, some can be shorter. And then, of course, .com took almost 7 years for it to recover back. Okay, so you invest in the S&P ETF in 2000, right? You just broke even in 2007. So if you enter here or here, right, of course you make money, right? So that's why timing is everything, right? And of course, 2008, the Lehman financial crisis, that took 6 years for it to recover. Okay, so 2 years of downtrend and then 4 years of recovery. Okay, so again, every cycles that you go through, you will experience different thing. In the US now, we are thrilled, we are excited, we are euphoria. People are pumping in more money, all right? And then of course, the next moment when the US index start to drop again 5%, people start to be more anxious, And then of course, in Chinese market, you are experiencing this, depression. I think most people are experiencing depression right now. It's so depressed. I invested for 3 years and it's down, okay? Now, don't feel bad about it. Don't feel depressed about it, okay? Because if you never go through 19, there's nothing compared to the year when if you have lived long enough, if you're 100 years old now, you probably have gone through 1929. Even then, you probably 10 years old, okay? But this is the Great Depression in the US. It's one of the worst recession crises that US has ever faced, and that actually took 25 years for it to recover. Okay, this is why they call it depression period. 1929, where people lost their job, economy was so bad. Okay, it was down consecutively 4 years, and then it took another 20 over years to recover back to its original level. Okay, so this is very, very depressing. Okay, and now. So I think by now you probably have noticed that there are actually different type of stock market recovery. Okay, so you have V-shaped recovery. So those that we have gone through, they are very short, very quick. Okay, those are what we call as V-shape. Duration typically less than 2 years. So the crash that we saw in 2022 and the COVID-19 2020 and the trade war 2018, those are very short crash, 20%, 35%, but recover in like short period of time, less than 2 years, okay? And then you have W-shaped recovery. This usually take 2 years to 5 years, okay? So you have the energy crisis in 1973, Asian financial crisis, right? 1997, okay? That took 5 years, 2 to 5 years. So it depends, right? Sometimes it take longer than that, right? And then you have a U-shape, all right? So W-shape still not so bad. I think Chinese market could be forming a W-shape, hopefully, okay? We are on that down cycle, but it might end up as a U-shape where it can take longer than that, 5 to 10 years. Okay, so this could be ended up as a Chinese market. Okay, it may take a longer time. Okay, so you got to be even more patient if this happens, because this happens during the energy crisis in 1973, dot-com bubble, global financial crisis, where it take more than 5 years for the market to recover to where it was. Okay, and of course you have the worst one, which is the L shape. All right, so this is like your depression that take more than 10 years. Okay, so Great Depression, like I show you 1929. I'll give you one more example later on, but kind of gives you an idea that there are different types of stock market recovery. So when you invest during the bear market, you just have to bear in mind that don't expect everything to be V-shaped. If you have the expectation on Chinese market, which what a lot of people are expecting with Chinese market when they invested in 2022 at a low, but it didn't happen, they ended up frustrated, they give up, they sold everything. And actually there are a lot of friends that I know that give up in China market. They don't even bother to invest anymore because it was so bad. Because they were all spoiled by the COVID-19 and then trade war. It was all so fast, okay? But this time now it is not that fast, okay? It could end up like this or this, right, for Chinese market. So you need to understand that some crises take longer than the longer time for recovery, okay? But what I want to share with you is in any bear market, there's always news telling you that the worst is yet to come. It could get lower. This is the article that I took a snapshot and I still save it until today because I want to remind you guys again and again that, this is March 2020, okay? And they said the worst is yet to come. And guess what? That was the lowest point during the COVID sell down. And that leads to a strong rebound. And one of the best decisions ever is to buy during that point of time, okay? So what to do during the market crash? First thing first, you need to ignore the market noise, right? Because there are so many noise out there. You need to learn how to filter out those noise, especially the media, right? They can be very toxic. They are not helpful at all, okay? So you need to know what to read. Don't anyhow read an article, share with your friend, market gonna crash. Don't do that. You're gonna make things worse, okay? You're gonna do more harm than goods, okay? So ignore the noise, okay? And don't panic sell, okay? Or change your strategy. Because during the bear market like now, especially you invested in Chinese market, there's the time where you might give up. You might think that, that strategy doesn't work. I have friends who give up value investing strategy, which worked for decades, right? And switch over to growth investing in 2021. And they changed the whole strategy and they put the money in, and the next moment, tech crash and wipe out 90% of their money. So don't change strategy during the bear market, because you cannot judge your performance during the bear market because sentiments are bad. It doesn't mean that your strategies are not useful. Okay, when there's a bull market, it doesn't mean that your strategy is perfect. You also need to improve it, right? So it may be just luck in the short term. Okay, so don't ever change strategy, because I see it very often when people see this strategy doesn't work, doesn't make money, they switch out. Okay, so very important, because if you are trading, it's very different rule. All right, so this doesn't apply to you. And of course, you need to monitor mental health. Okay, so during the crisis, especially a depression or W-shaped recovery or L-shaped recovery, it can be very depressing. So you need to make sure your mental health are in check. Okay, and then you have to deploy your cash. Okay, because there's no point you save up all the cash when the crisis comes. People are telling you not to deploy, and you listen to them and you don't deploy your cash. Okay, so that defeats the purpose of saving up your bullet for that big crash. Okay, and of course, do what you want to do. Spend time with your loved one. You like to do hobbies. You like to go fishing. Don't worry so much. After you deploy, don't check the stock market, because it can be very scary. Okay, so the best thing to do is don't look at the prices every day once you deploy your cash. Okay, so I hope you guys learn a lot. Okay, and if you guys like today's session, please type yes in the chat. At least I know that you guys learned something up to this point. Okay, because I've been sharing for almost an hour, right? And I still have a lot of questions not answered. I know you guys are spamming the chat box. I can't read, I can't follow up all the comments, okay, because it's too many. And yeah, so if you guys find this today useful, let's let me know. Yeah, great session. Okay, so I'm not done yet. Actually, I just want to make sure you guys are following me, and whether what I've shared with you so far makes sense to you. And if it makes sense to you, type yeah, it makes sense, and you learn a lot of stuff and you can apply it, right? So right now, I just want to take this opportunity to answer some of the questions that you guys have sent in earlier on, and then if I have time, I will stay back and answer some of the questions that you guys may have. And some of you have asked questions, like I said earlier on. Type your question later part of this webinar, because there are a lot of things to cover, and also there are a lot of questions that are pre-submitted to us, and I want to answer those questions in advance. Okay, and then after that, yeah, there's a recording for this session. You can watch the replay later on. Okay, so not to worry if you missed out the first half. Right? Yeah, so I'm glad you guys find this session very useful. Okay, so for now, I just want to answer some of the questions that were pre-submitted. Okay, so how would the crash in the US market affect Singapore market and China, Hong Kong market? Especially now, China and Hong Kong are already at a very low level. Okay, so Fong asked a very good question. I think if the US crashed today or this year, I can guarantee you that. Okay, I don't want to guarantee, but there's a very high probability that the China market will go even lower. Okay, all right. So, but you don't know whether that is going to happen. So even if you are very bullish on Chinese market because of the attractive valuation, you have to be very selective on the companies that you picked. Okay, but bearing in mind that it could get lower if US market were to collapse this year. Okay, that's why you don't want to deploy everything. You still want to have some spare cash for Chinese exposure in the event when the crash will come. Okay, but if the US crash, things are cheap there, you might want to prioritize US market, because there are more and better quality companies in the US versus China. Okay, so that's my answer to Fong. Okay, and then Sarah Vanan, I think a lot of you probably have the same question as Sarah Vanan. What do I do with my Alibaba shares? Okay, it's been down. My Alibaba share, I think, down like 50%. I'm sure some of you have down also 30%. If you get better price, maybe you're down only like 20%. If you bought last year, I think 2022, the low, which we bought also, you should be up, still up now, okay? But probably near to break even zone, all right? So we got in Alibaba a little bit earlier during the Ant Group crackdown, okay? But things just got worse from there, okay? Which I didn't anticipate. And I didn't add on much also, okay? And of course, the last add was the 2022 low, and the current price is still higher than 2022 low, okay? So what should you do, okay? Maybe you guys can give advice to Saravanan. What should Saravanan do with his Alibaba share? Should he or she buy or hold or sell? Please give advice to Saravanan before I give you my answer. All right, what do you think of Alibaba? Even Anna asking the same question. Okay, Alibaba has just started paying dividends. Okay, sell first, Mark say. Double up. Okay, all in. Team say all in. I have a member. Okay, last time always join us. Okay, Rusmin, I tell you, I sell house. I put all in. Sell house and put all in. Okay, don't do that. Don't do that. Right. So hold, do nothing. Okay. So you say hold, keep. Mary said Jack Ma and Joe Tsai just bought 200 million. So there's a vote of conviction or confidence. If you have cash, spare down. Okay, so I think a lot of you guys here can give advice. Okay, so don't need to ask me. You can ask the members here. Okay, but I just share with you my insights. But basically, I think what Mary has pointed out, the Alibaba co-founder has just added up 200 million of share, which is a vote of confidence. Okay, when you start to see insiders buying back share, is a good sign. Okay, and on top of that, Alibaba has bought back a lot of shares. Okay, so but this is just to show you the adjusted EBITDA for Alibaba. Okay, so 2022 was one of their worst year because of that COVID lockdown, right? And then there was there was, I think, an amount of money they spent just for the sake of growth, and that kind of like eat up the expenses. The growth didn't come in, and then that's where they scale back. So they rationalize it, and then 2020 was a year where you saw things just got better, and then of course 2024, it has actually almost go back to their 2021 level. Okay, so Alibaba earning before interest, tax, and amortizations are recovering, and hopefully 2025, okay, which their financial year end, I think is in March, right? So we could hopefully see a better picture in terms of our earnings. So it's not as bad as what people thought, okay? So Alibaba crashed 80% from this peak does not justify the fundamentals, okay? So there's a big disconnect there. That's why I think Alibaba is considered very cheap, okay? And there's a big disconnect because of the news out there, and especially during the crackdown, and they were the front line. Okay, so Alibaba is those well-known Chinese stock everybody will just buy, and then when they scared about CCP, taking a lot of regulatory measure on Chinese tech, the first one to get hit is of course is Alibaba, because they are the face of Chinese economy, and these are the stock was most badly beaten down. Okay, and what they did, the management did, is the right move. They have been doing massive share repurchases. This is the right time, the best time to do share buyback. And actually, I shared this with Alpha Lab members. Yeah, so if you're Alpha Lab members, just type me in the chat. I think you guys have probably seen this way long time ago, right? So they've been buying back 5%, reducing the share count by 5 to 6% every year. Okay, so they just keep doing that. If the price stay depressed, they can do more share buyback, and now they are paying out dividend, which is a good thing, right? So they should keep on buying aggressively, buying back share. And these are the kind of things that I want to do with my companies that are invested. They buy back share aggressively during the bear market, and Alibaba is doing all the right things right now. Okay, but people don't like it. They sell it off. There's a panic selling. There's a foreign investor pulling up. Yeah, so we have a lot of our members. Thank you so much for your support. But I think all this you probably have heard from me. So I think one of the best thing I will personally do is, of course, keep my Alibaba share. If I have spare cash, I will deploy it. Okay. If I have reached my allocation limit, I will not do it anymore. Okay. If I'm fresh starting up, all right, now is probably the best time to invest. Okay. It's the best time actually. Okay. So, but again, this is not a recommendation to buy or sell. Please analyze Alibaba share before you make any decision. Okay. So I just put this up front. Okay. Because not all of you here are members. Some of you have just joined us, know us through YouTube, right? So, but I just want to let you know our take on Alibaba. Okay, so I think it's still a good stock to keep. Okay, competition a lot more fierce. So it's not like there's no risk at all. Okay, like your ByteDance, your Douyin in China, everyone is entering into the live streaming market, e-commerce. So it's getting more crowded. But Alibaba, because they're quite solid, they are able to defend their moats. the castle quite well. Okay, so they've been quite resilient in that sense. Okay, the growth has slowed down for sure. Right. Beside the Magnificent Seven, how can one screen the stocks that has upside potential in the US market? Okay. So Ryan asked, how do you join Alpha Lab? Okay, so it's by invitation only. So you need to be our Alpha Quadrant member. Okay, so Alpha Quadrant members is basically a course where we teach you how to invest in growth companies. And once you go through that, we will open the invitation to the people who have gone through the course. Okay, because we want to make sure that you are aligned with us. Because if you don't know what you don't know, if you don't understand our investment philosophy, I can tell you a stock, but you may panic the moment the share price crash. Okay, so our Alpha members, they know very well our strategy. Okay, so they're not panicking in time like crisis, like what you've gone through in China, and they're not overly excited in the US market, just simply because a lot of US stock that we invested has gone up, double up, right? So basically, it's the community that we have, and it's basically the research where we have analyzed companies in depth, do a lot of deep dives in a lot of companies. And yeah, so these are for Alpha members. So you need to be, the next opening is going to be sometime in May or June. Okay, so you got to wait if you want to join Alpha Lab. Yeah, so beside Magnificent Seven, how can one screen stock that has upside potential in the US market? Okay, so I want to show you, those of you who are not our Alpha members or DBM Machine Professional member, you can actually do it yourself still, right? So you can go to this stock screener called Yahoo Finance. I'm just going to show you live on how you can actually screen out stocks by yourself. Okay, so let me show you my screens over here, right? So you can just go to Yahoo Finance screener. Okay, so right from here, you just go to this website, the first one on the list. Yeah, now there's this screener where it can help you to screen out the market, the stocks that are available for you to invest. Okay, so let's create a screener. Let's start out with equity screener. Okay, so now by default, they will search based on US market. But what you need to do if you're interested in other market, you can just select from the list here. Okay, Singapore, you can just type Singapore. Malaysia, I don't think Malaysia is inside. Oh, it is inside. Okay, so you can just screen Malaysian market as well, right? Or Hong Kong, if you're interested. I think so. Hong Kong, yeah, here. Okay, so I'm just going to keep it simple. US market. So I don't want all these things. Okay, so you can delete it off. Market cap. If you are interested in market cap, you can do it also. But I think what I want is I want to search screen stock that can give me a very good return on equity or asset. I was just going to put return on asset. You can put equity also if you want. Okay, but a lot of US companies, they have negative equity, so you might miss out on those companies. So I prefer return on assets. And then I also want to make sure the companies are not overly leveraged, so you can actually use total debt over EBITDA. Okay, and then you will add on that. And then next, what else can I have? Okay. Or let me see. Yeah, I think I want to have margin, net interest margin. Where is it? Yeah, so you have the gross profit margin, net interest margin. Okay, so I want to invest in companies that have high margin business. They have a good return on assets. Okay, so let's say I want to be very strict, 20%. Actually, return on asset 20% is very strict. Okay, let's put 10%. Actually, very good already. Yeah, and then see they are out of 10,000 over companies now. They filter out for you. Okay, so now you have 800 over companies to go through. Now I don't want companies to be too much debt. Okay, so total debt over EBITDA, I want it to be less than 3 times. Okay, so then that will gives you even lower range. If you want to be more conservative, you can put 2 times. Then you have less companies to look at. Okay, so I think 3 times is pretty okay. Net income margin, I want companies to have a high margin business. I want those lucrative business, so I want 20% margin. Now you have 316 stock to go through. Okay, so let's click on find. Okay, so you get to see your Magnificent Seven. Okay, automatically, right? So your Apple, Meta, Nvidia, right? So yeah, so these are the lists that you can start off. ASML, right? Cisco, right? And yeah, you can start to look out for some of these companies and know whether they are good companies. You have to analyze them. We usually spend a lot of time analyzing those companies. It can take days or weeks to verify them, and once you confirm they are good companies, you put them in the watch list. Okay, so now before the market crash in the US, you want to prepare your watch list, right? So this is the way they can actually help you to find it, right? So yeah, for our alpha members, we don't need to do this because you already have the watch list in our alpha research page. Same thing for Debian Machine professional members. You don't need to do this, okay? Because you already gone through, you already engaged our research service, which you have access to all the watch lists that we have available for you, okay? But this is to show you for those of you who are not our members yet, okay? But of course, if you want to be Debian Machines members or professional members, the next opening will be, I think, after Chinese New Year, we should have enrollment open for those of you who want to learn how to invest in dividend stocks, how to pick dividend stocks. Debian Machine will open up, I think, right after Chinese New Year. Okay, so watch out for emails for that. Okay, so but for now, I just want to move on and answer another question by Angus. Okay. What are your views on Japan and India market? Is it time to look at those market? Okay, so now some of you have asked those questions. So now, what is your view on Japan or India market? Yeah, so if you look at the Japan market, I think recently has been getting a lot of traction. People are very interested in Japan market, largely because first, China is no longer investable. Okay, largely because of the political tension between the West and the East, the US and China, and they are actually pulling out the funds from China market. They are pumping into Japanese market. Okay, that's why Nikkei 225 or Nikkei Top-C has been hitting all-time high. Okay, so you look at the Japan index actually. If you have invested in Japan market 30 years ago, you will feel even more depressed than those who have gone through the depression in 1929. Okay, because Nikkei 225 was down for almost 34 years, and even until today, it has not break the peak in the 1990s. Okay, there was a peak of Japanese market, and then they have lost 3 decades. And then recently, a lot of interest there because people, think that the yens are very weak now, and there was a potential rebound. And secondly, Japanese market is going through a reform. Basically, a lot of Japanese companies they are holding onto the cash. The stock exchange want them to explain why are they sitting on the cash and not doing anything with it. Okay, so in Japanese market, there are a lot of companies doing share buyback now. That's why in 2022, Warren Buffett actually went into the market because of that reform that's going through. Okay, and yeah, so a lot of Japanese companies now are getting kicked on the butts to make sure they are more efficient in allocating the capital, and that's why it leads to a lot of interest over there. And secondly, there's a lot of this thing called carries trades. Okay, so a lot of people actually borrow money on yen, okay, at a low interest rate. I think Japanese market still is one of those lowest interest rate, having one of those lowest interest rate in the world. So a lot of people rather borrow on Japanese yen, and then they invest in US Treasury. So they make the spread. Of course, they take on the currency risk. That's why when they borrow in yen, they buy US dollar. There's a lot of weakening. Okay, that's why yen is hitting all-time low because of this carries trade. Okay, people invest in yen, borrow in yen, and then invest in US dollars, right? So that's why yen keep on getting weaker and weaker for that reason. Okay. And so that will reverse, okay, because Fed is going to reverse the interest rate and the rate is going to come down. The carry trade is going to reverse. So more and more people will wind down their US investment in US Treasury, and then they will buy back yen. And yen is likely going to strengthen over the next few years, okay, because now we are hitting an all-time the interest rate is going to reverse. So yen is likely going to reverse, okay. So there's another driver for Japanese market. Mainly, so these are the 2 main reasons why I think interest in Japanese market is hitting all-time high. Okay, so now let's look at the fundamentals of Nikkei 225. Okay, so if you look at the PE, currently is slightly overvalued, right? But it's not heated. Okay, so Japanese market is reasonable. Okay, but you might not want to be, because the boat started sailing in 2022 when Warren Buffett entered the market, right? And then he has played on and recently has catch on even more because of the rate that's going to reverse. Okay, so if you have companies that you want to invest in Japan market, that's good. You can go in and then invest in them because yen likely going to strengthen. All right, so once the US rate start to reverse, but you don't know, that might not be the case. You don't know what things could happen, right? So I really don't know, but that is high probability events that the yen will strengthen, right? And when that happens, of course, your conversion to yen now will strengthen. So you have a currency appreciation. Secondly, the companies they're going to invest will likely going to have a higher rating because of that reform that Japan is going through. Okay, so that's my take for Japanese market. If not, you have to look at the ETF. If you don't have any companies there, you can look at the ETF and Japanese market. Okay, so yeah, so that's my take for Japan market. But Japan also has one of the worst demographic because of the aging population, and the birth rate is also hitting an all-time low. Okay, so and then of course some of you asked about India market. They have the best demographic. Then India now the market is also doing very well, and it has since overtaken Hong Kong as one of the fourth largest stock market in the world. Okay, if you ask me, would I invest in India market? The answer is no. Okay, let me tell you why. Okay, so now, over the last 10 over years, I think if you look at the currency alone, rupee actually depreciated against US dollar and Sing dollar. Okay, so if you are looking at the invest in those markets, you have a very strong headwinds against you, the currency. And will this strengthen? I don't think so. Okay, it's a natural decline, structural decline, and that will continue to happen. So a lot of all these emerging countries, you got to be very cautious. Okay, like countries like even Indonesia. Okay, even though they have very good demographics, you don't want to be in those markets over the long term. Unless you know what you're doing, you know that the company they're going to invest is going to double up, triple up in the next 5 years. If you don't know, I don't encourage you to enter those markets. Okay, it's very, very, very risky. Okay, so personally, I'm not in Indian market. But if you have rupee, if you are Indian, right, you invest in local market, you can do it. Okay, if you have a list of companies out there. Okay, but I personally don't understand the market over there, so I can't comment that much. Okay, yeah. So okay, I know you guys have a lot of questions. I'm going to prioritize those questions that I have received or we have received, right? So I still have a few questions that I have not answered yet. Okay, so please bear with me. Okay, so Gracie asks, okay, Align Tech, okay, the share price have crashed from all-time high. There are many competing products right now. What do you think of the value for Align Tech? Okay, I don't personally invest in Align Tech, and I will not invest in Align Tech also largely because, like what you mentioned, there are a lot of competing products, and it looks like a commoditized product now because their patent has expired, and I think they may still have a dominant position because a lot of orthodontists, right, the dentists who use Align Tech, right, as their solution, they may continue to do so. Okay, there's a switching momentum there. There's a switching cost there. All right, people they might not. The DIY market may continue to move on, but people who consult dentists will still continue to use Align Tech. Right, I don't know how long the mode will last, but I personally would not invest in it, okay, right now, okay, because there are other better companies out there in the US, okay. How about Singapore banks and REITs? Is it still good value? Okay, and a lot of you actually ask the same thing. Will the crash in the US affect Singapore REITs, Singapore banks, Chinese tech? How about Singapore bank, Chinese REITs? Is it a good value? Okay, a lot of questions about REITs, okay. So let me answer the REITs first. Okay, so if you look at the average yield now for REITs based on REITs SGX chart book, the average yield is about 7%. They excluded all those outlier like your US office REITs. Okay, so it's about 7%. If you look at the current Singapore bond, it's about 2.7%. So there's still a 5% spread. It's quite decent. In my opinion, and it's also still one of the good time to enter the REITs market. Okay, last month, if you attended the live webinar that we held, it was even more attractive at that point of time. And I told you guys to enter the REITs market. It's one of the best time to enter the REITs market. Now it has rebounded, but it's still attractive. If you entered last month, I don't think you should be looking at REITs market right now, okay? But if you still don't have a position in REITs market, now maybe still a good time to enter, okay? So let's look at the valuation. It's still at -2 standard deviation, between -1 and standard deviation. So it's still an attractive zone to invest. But once you start to revert back to the average, that's the time where you might want to pull back on your investment in REITs. Now it's still attractive. Okay, so Singapore banks. Okay, so this is the latest valuation for Singapore Bank. At this stage, it's slightly overvalued. Okay, so Singapore banks is still attractive in terms of yield, but I personally not deploying on Singapore banks. I've deployed them in 2020. That was the last time that I deployed. I have been holding since then. I think just getting and receiving dividends. That's all. Okay. So for Singapore banks, I'm not looking to deploy. But those of you who want dividends, maybe you could consider nibble some. But I think I'd rather you to sit on the cash. Okay. Yeah. So this is the valuation for Singapore Bank. It's no longer as attractive as it used to be. And okay, so then the next question comes from Justin. Okay, how do you know when to sell the share? If the share price has exceeded the fair value, when should one consider selling? Okay, so generally, if it's overvalued, you can sell. Okay, there are three main reasons why we sell. First, the thesis is no longer valid. If you make a mistake with your analysis, of course, you should sell. We have done that a few times. We realized the company is not as solid, and then we sold it off. I think recently I sold JPEG. I think I shared in the our YouTube, the mistake that we have learned in 2023. Yeah, so those are one scenario that you should sell. And the other scenario is that if you invested in the right stocks and the stock is now overvalued, like NVIDIA, for example, you may start to pare down those companies, right? So yeah, because if it's overvalued, you might want to pare down, okay? So that's one way you can do it, okay? But I will still encourage you to stay invested. And of course, if you have opportunities that are very attractive and you are short in cash, you can sell those overvalued stocks or those weaker position, and then you put the money into those companies that you think is a lot more attractive, is a lot more better in terms of quality itself. Okay, so I'm done with all the Q&A that have been submitted before this live webinar. So now I just want to take some time to answer some of the questions that you guys may have. Okay, so yeah, I hope I answer most of the question that you guys have for me. Right, so right now, okay, why is ATH is all-time high? Okay, I'm losing money, 20% in Mapletree Pan Asia REIT. What should I do right now? Okay, Anna, if that REIT is a good REIT, I think you should continue to hold, right? So don't look at the capital loss. Okay, for REITs right now is in the bear market, so you need to go through that bear market. So usually in the bear market, most of the position that you enter will be loss making. Okay, it's okay if the REITs continue to pay you the same dividends, all right, or slightly less, okay, you should not be selling. Okay, if the yield is higher, in fact, you should be looking at the opportunity to whether you should add even more. Okay, so and yeah, so for those of you who ask us about those companies that we invested in, Dividend Machine Professional, Alpha Lab, we will going to have a separate session for you, right? So this is only for you only, who are only Alpha Lab members, I think, or Dividend Machine Professional members. I think we're going to hold the next Dividend Machine Professional members for the meetup, the webinar, I think next Tuesday. Okay, so look out for our email invitation, right? And we're going to cover more in depth on some of those companies and REITs that we have in our portfolio, and what are the opportunities that you can look at, especially Chinese market right now is one of the best market for you to invest for dividends. Okay, so if you are our pro members, okay, you don't need to hold back your question on some of the companies that we have in our portfolio. Okay, so yeah, we will answer some of those questions next week. Okay, okay, so George asked, we'll appreciate your view about Singapore market if you have some time. Okay, so Singapore market, I think I don't have the data right now, but it's probably somewhere at the fair region or slightly undervalued. Okay, I think if you there isn't a lot of opportunity in Singapore to be honest. Okay, so which market looks more attractive right now? And then of course there are individual stocks. Some of the individual stocks that we have also covered. All right, also looks attractive, but it's not like a screaming buy, I would say, like what we saw in 2020. Okay, so for now, if you don't have idea in Singapore market, just hold back your cash, okay? But it's not overly expensive, right? So it's not like the time where you should be cashing out your Singapore shares, okay? US is not, okay, so what are the questions that you guys have, okay? Okay, so some of the questions have been answered by the members here, so I'm not going to pick them up. Okay, so PK, okay, I'm not sure. Okay, so if you have a question, put them a question mark, so at least I know. Though China have a Magnificent Seven, okay, unfortunately, China doesn't have a Magnificent Seven. They used to have BAT, Baidu, Alibaba, Tencent. But Baidu has fallen also. I don't think they have a Magnificent Seven. Okay, they have BAT, right? So now the Baidu is being replaced by Meituan, but even Meituan has collapsed in value. Okay, so there's no more Magnificent or they are usually classified as just simply a Chinese tech itself. Okay, so what other question that you guys have? Is Food Empire a good buy? Okay. I think Food Empire is not for people who have weak heart, because over the years of monitoring Food Empire, they've gone through so many crises, right? So the Russia war, I think, caught everyone by surprise, and the Russia currency also sometimes can be very, very volatile. So if you're in those markets, especially like Food Empire, I think it's a very scary stock to invest in actually, okay? But if you want to invest in Food Empire, you should invest in a situation where the share price tank a lot. Somehow they can always recover back to their previous level, okay? So like the war, Ukraine invasion, the sanction of Russia, which was very scary to invest then, okay? But there was a time where you should be looking at those markets because they sell a lot of instant coffee and the foods. Those are a lot more resilient in nature itself, okay? Tencent has fallen to 5 cents. Good try, Daniel. What is your point on KLLC? Okay, the Malaysian market. I think Malaysian market is also pretty much similar to Singapore market. But just that I have a hard time finding more opportunity in KL. Okay, so KL stocks, somehow a lot of them are very expensive. So I think KL, there isn't a lot of opportunity. I think it's even worse as compared to Singapore. Okay, somehow the KL market are very resilient by itself. The valuation somehow is always on the high side. Okay, so I can't find any good opportunities in KL market. Okay. Okay. What is your take on Xiaomi? Recently, Xiaomi come out with EV car. Okay, I think for Xiaomi, they are in the space where it is very competitive. I know they are not just in the hardware business; they are also in the software business. But honestly speaking, Xiaomi is not even in their software business are not that strong. They have their own ecosystem and all that. Okay, at the end of the day, I think Xiaomi is still going to be a 80% hardware business. It's just that they are able to produce a lot of techs at a much cheaper price. Like I think I have a lot of Xiaomi products at home also. I mean, the vacuum cleaners, you have the fans, and of course now they're coming out with EV. So they can be they have the economies of scale. They have China, as one of the best manufacturing country in the world, right? So they are able to manufacture things at a very cheap price, and they brand themselves at a very good. In terms of branding, they are pretty good, right? So value for money. But I don't think it's one of those companies that will invest because they are continuously on the price war with everybody, even for the smartphone market. So there's no pricing power. So one thing about investing in Chinese stocks is that, I have learned from investing in aseptic packaging, GAPAC, is that if you don't have a pricing power in China, it's very difficult, right? China is the market where it's big, right? But a lot of companies there really compete on price, okay? So continuously they have price war. The prices are rock bottom. They are like, racing to the bottom, right? And it's just going to be bad for those companies who doesn't have a differentiating factor. Okay, so that's why I don't think that if you are investing in some of those hardware business, it's not going to last. the moat is not that strong itself. Okay. Even though they enter into EV market is one of those market is even worse, right? The price war is non-stop. Even like Apple has to be forced to reduce their price for their Apple product in China. Tesla also have to reduce it because there's no pricing power over there. Okay, so there's no differentiation, and it's just tough. Okay. For Esther asks, for someone who has yet to enter Hong Kong market, what stocks or ETF would be good to start off with? Okay, so Esther, if you don't have a specific stock to invest in China or Hong Kong, I would personally will encourage you to look at the ETF. Okay, so there's one ETF I think is good for exposure in Chinese market, especially which includes the Chinese tech, which would be going to be your tracker fund. Okay, tracker fund. They have one of the best fees, right? Lowest fees in Hong Kong. Okay, and yeah, so don't buy ETF that are listed in US that have exposure in China. Okay, don't do that. It's not efficient. Okay, go straight to Hong Kong market. There are ETF that are listed in China that invest in Chinese stock. You want to do it that way. Okay, so tracker fund is one of those funds that you can actually look at. Okay, so this is to answer whose question is that? Okay, but I hope that answered your question. Do you like Chinese EV stock? Okay, Mary asks. I don't. Okay, because yeah, I did look at them, but I look at the competition in the market. It's really like, it's crazy, right? So I mean, I have to give it to kudos to Warren Buffett and Munger, and they had Li Du, they had invested in BYD, 10 years ago. Okay, before all this started to went viral, okay, especially during the pandemic, right? And they have since cashed out their investment in BYD, and largely because the market is going to get very competitive, and with any industry in China, things is just going to get worse. Competition is going to get more intense. Prices is going to come down. Okay, that's why China doesn't have the inflation problem. They have deflation problem, which is a worrying sign also, because if you have a deflation problem like what Japan has gone through for the last 20-30 years, it can be very hard for economies to grow. Okay, so I think China will come back. The inflation will come back, right? It's just that the price war in the country is way too strong. That's why they don't have the inflation problem over there. Okay, is iFAST a good stock to buy? Phyllis, I think it's overvalued right now, so you might want to wait. Okay, it's one of those. iFAST is one of those stocks that we covered, I think, in 2016. One of the very first few stocks we covered on Alpha Lab. All right, and there was at the point in time was still like 80 cents. Nobody want to buy it, and now it's like $8, 10 times. What is your view on gold and silver? Okay, I don't personally invest in commodity, largely because they don't add any economic value. Okay, so if you put gold and silver in the vault, 10 years later, you will still have the same amount of gold and silver. But if you invest in businesses like Alphabet, which I do, right, 10 years ago versus now, right, Alphabet has created a lot of values to the society. The value has grown. I think Alphabet has gone up by 4 times or even 5 times, right? So that's why I still prefer to invest in businesses that add value, that produce economic value, rather than pure commodities stocks or commodities products like your gold and silver. Okay, will de-dollarization affect the stock's return? Good question, Winston. I think US dollars is not going to lose its power anytime soon, largely because the economy is still very strong and they have the biggest gun in the world. Okay, everybody's scared of them except Russia. Russia also have a very powerful gun, nuclear weapons. But it's one of those economy, you don't want to mess with them, right? The US dollar is backed by biggest gun in the world, so I don't think it's going to collapse anytime soon, right? So, but if dollars start to weaken in the future, right, China comes up, right, because now US is trying to push down China, right, so that yen would not replace them. That's why China is having a hard time. So the short term, China is going through all this, supply chain issue, all this AI chips that's banned, that they can't get these high-end chips from the US or even Taiwan, all right? So, but I don't think US is going to lose the dollars anytime soon, okay? Because China economy is still quite weak, so there's no other currency that's going to replace US dollar, okay? So I think in the next 5 years, 10 years, I don't see that as a risk. So, so it's quite a hypothetical question that I cannot really answer, okay? Hong Kong property developers look very low. Are you looking at any good companies? Max, I think we do look at some of the property investment companies in Hong Kong that have exposure in China and Hong Kong market. Yes, if you can come find those companies that leasing out their investment properties rather than deriving a bulk of their profit from property development, you should look at those companies. Okay, now their yield are very attractive, 9%, 10%. Okay, we do invest in them. Okay, so Max, if you can find those, you can do it. Okay. Dividend Machine Professional member, I think you guys have probably know what are those stocks. And Mazian, Yusuf asked, is Chinese bank good to invest? No. Okay, I know valuations are that cheap, right? It's very cheap. But the problem with Chinese bank is that they often have to step in to help to boost the economy, all right? So one example I can give you is that recently, I think the last 2 years, we have seen the property crisis in China getting back to worst. And a lot of Chinese banks were being asked by government, right? Of course, they usually will say, they will volunteer, right? But a lot of times these banks will listen to the government because bank is the backbone of any economy, right? And they were being, forced to reduce the mortgage rate for existing borrowers, right? So this is bad for banks, okay, because your net interest margin will come down because of that. Even though you may have a contract with your borrowers, right? So the bank now have to reduce that because now they want to save the property market, right? So so that's why banks in China with a lower interest rate environment, it will not do well for the next few years until the crisis is over, okay? But it might be one of the best time to look at Chinese bank, okay? Just that there are too many and it's a complex country to, you have a shadow banking. It's too difficult for me to look at the banks in China. It's too complicated. It's not like Singapore where you can just look at those 3 big banks, you see the regulation, you see their loan profile, what they loan out to, right? And you kind of like, know that, oh, it's quite safe, right? But in China, it's too complicated. Even though they're cheap, I think they're cheap for a reason, okay? So I don't have a lot of, I don't think, you should be looking at Chinese bank, okay? Does Tracker Fund still track Hong Kong market? Yes, it does. Okay, they peg to HSI, Hang Seng Index. So any constituent change in HSI, Tracker Fund will follow, okay? Palantir has doubled up the price in 2020. Should I keep at hold? I don't know Palantir, honestly. And those are one of the stocks that meme stocks, but I don't look at them. Is ARA Hospitality a good share to buy? I think you should not be looking at hospitality REITs. They are very volatile. You should actually be looking at them during the pandemic time, 2021, 2022, when nobody was looking at them. Now, with all the prices have covered, I think it's not a good time to enter the hospitality sector. Okay, so okay, I think how about Tencent? Again, okay, so for Tencent, since you guys asked, I think the recent gaming change, the regulation that came out, I think late of last year or last month, kind of like sparked the sell down, all right, the entire Chinese tech. I think there was Tencent dropped to, I think at one time dropped by, I think 14%, right, if I remember correctly. But then subsequently, it was the wrong move by the regulator. But then subsequently, if you saw what the Chinese government did, is that they fired the regulator. The guy who made the announcement, the guy who made the policy, they sacked him. And then recently, they took down the website where they're going to regulate the gaming sector in China, right? So they took it down. They don't even have that article anymore, right? So I think you can see that what Chinese government is doing, they are coming all out to make sure that the investor confidence are there. It's already very weak. They don't want to make it worse. They are coming out to the entrepreneur. They are traveling to the US, telling all the US entrepreneur they can go back to the market, and they are supporting that, right? So now they are trying not to do anything funny to destroy the investor confidence again. Okay, you can see that, right? You can see that. So that's why I think China market, the government now is a lot more predictable. Okay, this has not been predictable. I think 2 years ago, where they come out with all sort of funding policy to kill off the edutech business, and then all the regulation that came in, the impact was really bad. Okay, so now they saw it. That's why the government now are very careful with what they draft out in the policy, right? So I think they are a lot more supportive. All right. So the December gaming regulation was a mistake by people. It's almost like, your left hand is don't know what your right hand is doing. Okay, they have no intention to do it, right? So that's why one funny fella do this thing and then they just sack him, right? So, but you can see that they are boosting it. And Tencent, I think the fundamentals are still rock solid, and the growth drivers are there. I think it's probably one of the best stocks, personally, I think, for China. Right. So, but don't take my words for it. Please do and do your research, because things could get worse from here, especially if the US market crash. You want to be prepared for the next tranche. Okay, might be ready to deploy. Okay. So, yeah, again, I'll share more insights with our Alpha members. I think here I just share with you briefly. But if you're Alpha members, hang on there. Okay, I will always share with you guys a lot of insights over there. Okay. Is Audience Analytics a good dividend stock? I don't know, actually, Patricia. Sorry, I've never looked at the stock before. CH asks, are there any talks on buying US REITs like Realty Income? No, I don't look at US REITs because I'm not familiar with the US properties, so I don't look at them. Right. So, do you think interest rate cut already priced into the current market, especially for REITs? I think yes, in the sense that the market has rebounded. I think earlier the year you see the REITs market in Singapore has a very strong rebound, but it's coming down. Okay, I think the impact has not even fully kicked in yet for the REITs. So this year you may still see that REITs report lower DPU because of the loans. Some of the loans that they matured last year, they refinance it at a higher rate. So this year you are probably going to see more impacts coming in for a lot of REITs in Singapore. Okay, so you're not going to see the light at the end of the tunnel yet for REITs until rates start to drop more. Okay, so for now I think REITs might stay low for a while, but it's also one of those best time for you to accumulate. Okay, so that's my take on that. Baidu, I think to be honest, I look at Baidu before, but I drop it because their search engine sucks in China. The accuracy sucks, okay? And they have a lot of ads, right? So it's not like your Google, right? So a lot of people in China don't use Baidu search, although they are the dominant player. When they need to do search, they go Baidu, right? But interestingly, what I have noticed with the amount of Chinese people is that they search through your short form video, they search through your Tencent WeChat app. So the search market is very fragmented over there. Okay, and yeah, so of course that time if you were to look at Baidu, it's more like a EV autonomous driving, but until today they have not cracked it. So it's more like a story rather than a driver itself. Okay, and the advertising there, the market is so competitive, especially with Douyin, Tencent video channel, and a lot of competition over there, and quite sure. So advertising market is very competitive. It's not like your West where you are dominant players like your Meta or even Alphabet. Okay, so which REITs in Singapore safer? Lee, I'm not going to tell you the answer. You need to attend our dividend machine program. Okay, I really encourage you to go through the module first, the course first, because if you are just asking for stocks, right, it can be very dangerous, right? It's important for you to know how to learn how to analyze dividend stocks like REITs, banks, and then subsequently you will know you will actually answer it yourself. You don't even need to ask me the same thing. Okay, and it'll be more self-sustaining rather than keep coming back to us for fish. Okay, so how about Crown Castle? I've never looked at Crown Castle before. Okay, Katrina or the rest of you who are interested in Dividend Machine, is closed at the moment. Okay, the next opening for Dividend Machines, look out for our email. I think it's going to be probably sometime after Chinese New Year. All right, somewhere in late April, okay, or early March, you're going to see the reopening. Okay, so once it open, you better sign up and join, because the next moment, once we close it, the next one that we're going to open is going to be in 2025. Okay, it's once a year, so the intake is only for a limited period of time. Okay, so we only take batch by batch because we spend most of our time researching companies. Okay, so you might want to look out for that. Right, so Esther Laura. Okay, so this is one of the Alpha Lab stocks. Okay, so I think I will keep that for our Alpha members. Yeah, honestly, I'm not very familiar with it also, so I can't give you the answer. Leo would be a better person because he is the one analyzing it for that. Okay, Ernest, how much capital for Dividend Machine? Okay, it's very affordable. Okay, so it's only the price we will reveal to you again once it launch. But it should be within like 600-700 that region, right? For the for the entire course with unlimited updates and everything or whatsoever. Okay, so it's very affordable. No need to worry. So some of you asked privately, I attended Dividend course previously. Can I attend as a refresher? I recall that Dividend Machine used to offer that option. Yes, SH, if you are a member of Dividend Machine, once we reopen it, we will have live webinars that we will conduct. So you can attend the live webinar again and again, unlimited. Okay, so you have an unlimited membership. So don't need to worry. Okay, so it's pretty good deal for you guys. Okay. Yeah, so some of you say there are 13% dividend yield for Hong Kong REIT. Yes, Hong Kong are very attractive, Alvin. I don't know how to tell you, but if you've gone through 0809, you know that the REITs at that point of time in Singapore also trading at 12%, 13%. Okay, so Hong Kong is really going through 0809, that kind of valuation. Okay, in fact, if you compare PE multiples for Hong Kong in now versus 2008, 2009, 2009, the PE for Hong Kong market was, I think the low was like 10 times, 9 times. Now it's 7.5 times. Okay, I just recently looked at it. I said, oh my goodness, people are so bearish about Hong Kong market, China market as a whole. Okay, so it's one of the best market to invest. Okay, so you must make sure also that you have an allocation for that. I don't want you guys to like, 100% China. Okay, the next moment the crisis drag on 2-3 years, you feel depressed. Okay, so make sure you have an allocation strategy. If you are comfortable 20% of your portfolio in China, now is the right time to go in. Right? So if you're not comfortable, then don't go in. Right, it really depends on the risk appetite. For me, I'm comfortable, right? So I deploy 30% of my capital in China, Hong Kong market right now. Okay, so yeah, and with when is the growth, the Alpha Quadrant? Okay, Kai Kiat asked when is the Alpha Quadrant? We call it Alpha Quadrant, the course intake. It's going to be in the mid of the year. Okay, so right after Dividend Machine, the next opening is going to be Alpha Quadrant. So make sure you frequently check our email, because once you open up, you can sign up from there. Okay, so Kaket, the date, I think we will announce closer to the date, to the time. Okay, but it will be somewhere in May or June, that period. Okay, how much more time do you think we have left before the crash comes? I don't know, Alvin. Okay, Anna. Okay, I don't know. Okay, with AI, what is your opinion on semicon like TSMC and AMD? Okay, Joseph. I think the AI waves, it's way overrated right now, so it might not be a good time to really increase your exposure in AI. I believe AI will change the market in the next 5 years and 10 years, okay? But the actual benefit may not come in within this year, okay? So the market is reacting ahead of it. And if you're investing in TSMC, you must bear in mind that it's a semicon stocks. It's they are one of the best in the semicon industry, but they're also semi-cyclical in nature, okay? So you got to be watch out for that. Okay. So how do you sign up for Alpha Lab, Patrick? You need to be an Alpha Quadrant members. Okay. So for our members invitation only, you need to go through the course that we have. Okay. So just in case of those of you who are interested to join us, right? So once you're a member, you will know how to join after that. Okay. Just come for our live webinar. Okay. So with that, I think I'm going to end off the session today. I actually run longer than what I initially planned to do here, 1 hour and 30 minutes, but I think now we are almost close to 2 hours. Okay, I know you guys have a lot of questions that I couldn't answer. I'm sorry if I left out your question, but don't worry, this is not the last session that you will interact with us. Okay, so we will hold regular live webinar like this, with you guys. And if you guys want to have more sessions like this, let us know in the chat. At least we know that you guys love session like that and you will attend more frequently. Okay, just type more. Okay, and you love it. If you love webinar like this, you type love it. Okay, so at least we know that these are the type of session that you guys will find it useful, and we will continue to have session like that with you guys. Okay, of course for our members like Alpha Dividend Machine Pro, we will talk more in depth on individual stocks. Okay, so just watch out for our invitation for the next week event. We have a Dividend Machine Professional webinar, okay, which is going to be held on the next Tuesday. So mark on your calendar. Okay, you don't want to miss that session because we're going to focus on Chinese stocks, especially those dividend stocks. They are very, very attractive for you to look at right now. Okay, so for now, thank you so much. I think I see a lot of you guys have enjoyed this session, and you guys want to have more session like this. Yes, we will do it more in the future. Just make sure that you watch out for our email, right? Continue to watch our YouTube. Okay, we also share a lot of good insights on our roundtables. Okay, so you're gonna learn a lot of stuff from us from 5%. Okay, and of course, thank you so much for all of your support throughout all these years. Okay, this is our 10 years anniversary. And yeah, we look forward for the next 10 years, okay, with you guys. And let's make money together and huada. Okay, so let's what this year. So just type huada in this chat. And yeah, thank you so much. And I'll see you guys again. Okay, so cheers. Take care and have a good rest for the night.